Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, April 22nd, 2010. Okay, this morning we're talking about too much debt. It looks like in the EU they came out with the Eurozone government debt GDP ratio figures, and they came in a lot higher than expected. Just to give you an idea, we've been talking a lot about Greece lately, okay, and its budget deficit came in at 13.6% of GDP, which was higher than the forecast of 12.9%. So, this obviously isn't a good number, but what I thought was interesting is that this isn't even the worst number in the Eurozone. All right, actually Ireland's got the worst budget deficit at 14.3% of GDP. So, why all the hoopla over Greece? Well, the Irish were a little bit proactive. They recognized where they were, and they took austerity measures seriously right away. They're not rioting in the streets over this as they are in Greece, so they've sort of come to terms with what's going on, and they've taken their medicine, so to speak. I guess we can't say the same for the Greeks just yet. So if we take a look at the quick chart here, we're looking at just a one-day chart on the 5-minute, right here, 5 a.m. That's when this news hit the wire, and boom, you can see the sell-off in Euro USD. Now I just want to look at this also in the daily chart. Okay, we talked about the euro is going to trade sideways. Looks like we're coming on close to 132, and we're near. It looks like a 3-month low. Oops, let me get rid of that Fibonacci retracement there. Don't know why that's in there. I just want to look at this on the 1-year chart. As you can see, if we break this near-term low, there'll be some psychological support at 132, but it could be next stop around 125 for the euro. So we're going to have to see what happens with that. But I imagine what's going to happen is that as we test these lows, they're going to come out with the actual terms of the bailout and see what's going to happen. So, that's what's happening with the euro. Another thing I want to take a look at is let's take a look at Aussie USD here. This is the Australian dollar versus the US dollar. I just want to look at the 5-minute charts and just show you something. Real easy, but when I start this blog in the morning, I'm gathering all the news, I'm getting color on the market from my various sources. Okay, and by the time I'm finished with it, all right, it's usually right around the time the market opens. And as you can see here, started off this morning, and I said, well, the Aussie's hanging in there. There's some pretty decent news. The Kiwi's higher, which also has some pretty decent news. And then what happens? Well, boom, you can see right here, as soon as the U.S. stock market opens, bam, it just sells right off. Why is that? Well, you got to remember that the U.S. stock market tends to trade inversely to the U.S. dollar. So if the stock market's down, the U.S. dollar is going to be higher. If the U.S. dollar is higher, then typically the Australian dollar is going to be lower. Okay, and you see that right here. We can also look at the same phenomenon with the Kiwi USD. Sure enough, same deal right here at 9:30. Bam, sells right off. Even though there was some decent news out of that region. All right. New Zealand, basically, their consumer confidence figures came in. They were unchanged, so it's showing signs that an economic rebound, may be occurring. Okay, and also, the IMF upped its growth estimates for the region to 2.9% from 2.1%, and the finance minister was out saying that the economy is recovering slightly more strongly than the last time they had this reading in December. So things look pretty decent over in New Zealand, but that's what happens when the market trades on these risk themes. You can see it right there. That's a perfect example. All right, one of the other things I want to take a look at is let's look at the pound dollar. I want to look at the pound on the 4-hour chart here. As you can see, we use different time frames all the time to kind of show you what's going on. But here it is. We're just looking at a little bit of a pullback. Well, what happened? There was a slew of news out of the UK. Retail sales figures came in slightly lower. Mortgage approvals are slightly higher. Okay, business optimism figures came in higher. So there's a lot going on there. But as you can see, this is more related to risk aversion. Looks like a little bit of a pullback, and you can see on the 4-hour, we're sitting right here on the 20-day moving average. So that's the short-term support for the pound right now. So we're looking at that. And then the last thing I wanted to look at was let's take a look at the Australian dollar versus the Japanese yen. Now, We don't look at the yen crosses often enough, and maybe I should take a look at that. But this is what I call an extreme trade. We'll just look at this on the daily. All right, I just want to show you something here. Now, a lot of the reasons why you see yen strength when there's risk aversion is because of carry trades. Now, we've discussed carry trades. You basically buy the higher yielding currency pair and you sell the lower yielding currency pair. Well, the most extreme way you can do this is through Aussie yen, right there, or AUD JPY, Audi JPY for neophytes out there. So what happens is that on rollover day, okay, the reason people do this is because they collect interest. Currently, interest is 4.25% in Australia. In Japan, it's 0.1%. Right, so there's an interest rate differential there of roughly 4.15%. So what that means is that if you buy this pair, okay, on every Wednesday, you're going to collect that amount of interest. Now, obviously, the price of the pair can fluctuate up and down, so that's going to determine what your effective yield is on the trade. But if you think about it, all right, you've basically got 4.15% of room in there that, if as long as this pair doesn't trade below that amount, you're going to end up making money. So, you could do something like set a stop at 3.5% away from where your entry is, and you're still going to make money. So that's one of the reasons why, folks like to trade the Forex market, because there's a lot of ways to make money here. You can do it through just regular appreciation or depreciation of a pair, or you can also do it through interest rate differentials. So, that's what we're looking at. Today we've got the housing numbers are coming out in the U.S. I just wanted to show you something real quick on the technical side as well. Let's just look at the 5-minute chart right here. The housing figures are coming out in about 3 minutes, and right here looks like maybe like a little bit of a short-term bottom here on AUD USD. So it's possible that these housing numbers are going to come in a little bit better than expected, and we could see a pop right up there. So we've got a stochastic crossover. This could be a nice entry, low-risk entry point for somebody. If they wanted to, you could just put your stop just below there. So that's sort of the way we trade on the technical side. We use the macro themes in general, but we look for technicals for our entries. So that's what we have today. Keep an eye out for those housing numbers in a couple of minutes, and think about the euro and what's going on there. Keep an eye on that, because that's the biggest risk in the market. And also, they're talking about Chinese yuan depreciation, or appreciation rather, which we haven't touched on, but we will tomorrow. So that's all I've got. Good trading to all. As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.